The month of February has been my best month ever since I started trading Forex. Why? Because I had to tweak my strategy. I didn't change my strategy, but I had to tweak my strategy. And thanks to my journaling, right? And this is why I overemphasize the importance of journaling. Why? Because when you go through your journal properly, you're going to understand the areas where you need to improve on. No matter how profitable you are, there are still some mistakes or adjustments. Why? Because the market is dynamic. And as the market changes, you don't want to remain static. You need to also change alongside with the market. And ever since I noticed that, I had to change the way I trade or revolutionize my strategy, and I had the best month ever in this past month of February. Right now, I'm about to share that with you. And it should, in case you see me for the first time, my name is Gordon Trade. What I do here, I come here, I share my experience with you so as to help you become a successful, profitable Forex trader. So let's dive right in. So what did I actually change in my trading? Now, I didn't change my strategy. You guys know that I'm a price action trader, and I also use a little bit of ICT for my entry confirmation, right? But this month of February, I just decided to just stick with price action only. Why? Because both SMCs, Smart Money, ICT, Quasimodo, technical analysis, they are all talking about prices, right? So in Forex trading, I don't want you to get yourself mixed up. I don't want you to start looking for different strategy from one angle or the other, only if you understand these three things, right? Now, number one is market environment. So the market environment explains to you who are the market movers, who are those who are in charge in the market. Maybe probably it's the buyers or the sellers, right? And if the buyers are the one in charge, you'll be seeing uptrend. And if the sellers are the one in charge, you'll be seeing downtrend. And if they have equal rights in the market, then you'll be seeing consolidation, right? Now, the moment you are able to understand the market environment, you want to spot out your point of interest, right? Where you want price to what, to retrace to or to get to before you can properly execute, right? And the number third thing you want to also take note is your entry and exit strategy. So many Forex traders understand the market trend, but they have poor execution. Their entry strategy is very poor, and their exit strategy is also very poor, right? So in the month of February, I went through my journaling and I discovered that I trade too many pairs, not because I don't understand them, but because, you know, when you invest in several pairs, one will give you money, the other one will take money from you. Then I discovered the instrument that has made me the most amount of money over time. Then I focused on that. Now, one thing I did was, if I'm looking at two instruments or three, the moment I spot the best of the best setup, that is what I would take, right? I can't be on gold and go and enter GJ. Believe me, I used to do that. Sometimes I would enter 4 instruments on one particular account. Maybe I'm currently trading gold, I'm trading GJ, I'm trading USD JPY, and I'm also trading that random pair, right? At the same time. Now, what are you saying to yourself? You are like spreading your eggs in different baskets. Now, if you want to become profitable, you want to invest in one basket, right? Invest in one asset. If you are looking at GPP USD, for instance, and you're also looking at gold, now look at the one who has given you, who has the best setup. If you are going for GU, stick with GU, invest in your GU, right? Now, you want to take advantage of the markets, right? Why? Because the same setup you're seeing right now may not play out all the time. So you want to take advantage of the market. You never could tell when, again, the market is ready to give you money. So if I see a very good setup that is willing to give me whether 1:5 or 1:6 risk to reward, that is where I want to execute more position, right? Now, I want to be using my stacking method to make sure that I make the market properly. Because by the time you're on this particular trade, and you're also solving for other particular instrument, you may not know that probably that one you're solving for might be the one that will subtract money from your account. So instead of putting money in different instruments, I decided to stick with one. And when I'm on this particular instrument, I wait for possible retracement so that I can enter more position. And trust me, I did that in the month of February, and for 1 month, right, I was able to break my own record. I was able to pass 5 different Profem challenge accounts, right? I was able to move one from phase 1 to phase 2. I also moved that same month from phase 2 to funded phase. And I've never done that in quite a long time, and it happened, right? Now, why? Because I had to tweak my strategy. And what I also did is that I noticed that most times I used to go in aggressively. Sometimes maybe because of the volume of the market, then I like to go into early. Then I work on that aspect as well. I needed to wait for each candle to close before I execute my position, right? Because you might be seeing a bearish or bullish engulfing candle. Let's say you want to go for a buy and you are looking at the 15-minute time frame for your entry. Now, what I also did was that I waited for 1 hour candlesticks to confirm to me if I'm to go in for buy or sell. Initially, I'll just wait for 15-minute candle. The moment I see a bullish engulfing candle, probably I'm going for buy, or I'll wait for bearish engulfing candle. If I'm going for sell, I will just execute immediately. And later, sometimes the market will just hit or sell. But I discovered that I needed to wait for 1 hour candle to close. Why? Because the market is always changing. I've been doing that initially and it has been giving me good profit. So over time, things become different. So what I did was that, okay, I had to move to a little bit of intermediate time frame, which is the 1 hour time frame for my confirmation. So whenever I want to execute any market, any trade, I needed to wait for my 1 hour candle to close. If the 1 hour candle still close or break above the particular psychological level, so that is when my confirmation will not set in that the market is ready to go in for a buy, or the bulls are ready to take the price downward, right? So in my journaling, I was able to also discover that during price retracement, instead of using your eyes to just calculate where price may retrace to, learn to use your Fibonacci tools. A lot of us don't use Fibonacci tools. Why? Because you just feel that since there's a break of structure in a particular region, price is definitely going to get there. No. You need to use your Fibonacci retracement level and mark out that particular Fibonacci level where price needs to retrace to, right? I discovered over time that if I don't use my Fibonacci tools, sometimes I get in too early and market take me out. But the moment I start applying Fibonacci tools frequently, I start going in at the accurate time, right? And sometimes a lot of little things like this can make you lose money in the market. So never overemphasize or underestimate the powers of your tools. If you know how to use the Fibonacci retracement tool very well, please try to use it so that if you want to get on a particular trade, you need to wait for that market to retrace, and your Fib level is there to help you out. So the last but not the least is waiting for the actual session to play out. Sometimes I like to wake up during the Asian session to look for possible trade entry. But I discovered that the Asian session is always a ranging market, and sometimes price will also move as well, right? But those days are not always frequent. So what I decided to do in the month of February was to allow that time to go and wait for my proper trading section, which is the London section and the New York section. And guess what? I've been able to notice that once it is 8 a.m. or 9 a.m. in the morning, I usually get set up on the instrument that I trade, right? And this has helped me in a way, right? Because right now I know how to mark my time and I don't have to just be on the chart all day. I know when my setup is actually going to play out. And by the time I come, if I didn't see any setup, what did I do? I just have to look for other things to do instead of babysitting the chart, right? So these were the few things that I tweaked in my trading in the month of February that has increased my win rate over time, right? And I need you to also look at your trading journal. So in case you don't have any, please, this particular month of March, start, implementing or being serious with your trading and have a good trading journal, right? Because this will help you, reflect back on how your trading has been. So if you find value in this video, make sure you like it and subscribe if you're not following me. I'll see you in my next video. Thank you.